Today's tech news moves fast, but understanding it shouldn't be hard. That's why Snarful Solutions Group brings you Connecting the Dots, where we break down what's happening in tech and why it matters to you. Now, let's dive in with your hosts.
Good morning, good afternoon, or good evening, wherever you're tuning in. It's Thursday, May 15th, 2025. Welcome to Connecting the Dots, the show from your friends here at Snarful Solutions Group in Sacramento, where we break down the day's tech stories and figure out what they mean for you. I'm Alex.
And I'm Morgan. Yeah, joining you from sunny Sacramento, definitely warming up today, expecting about 85 degrees, I think.
Nice. Okay, before we jump in, just a quick look at the markets. The Dow closed yesterday, that was Wednesday the 14th, at 42051.06.
And the S&P 500 finished up at 592.58.
All right.
So today we're tackling three pretty big stories making noise in the tech world.
Yep. First up, YouTube and how they're using AI, artificial intelligence, to tweak the ads you see.
Then we'll look at CoreWeave, that AI infrastructure giant, some surprising numbers in their latest financial report.
And finally, the trading platform eToro. They just hit the Nasdaq. We'll see how that went.
Let's connect these dots to what's happening in your world.
Okay, let's start with YouTube. They've announced something called Peak Points. Uses Google's Gemini AI. What's the story here?
Right. So the core idea, it's actually pretty interesting. They're using Gemini AI, which is, Google's advanced AI model.
All right.
To analyze videos. It looks at things like specific frames, the transcript, basically trying to figure out the exact moments when viewers are most engaged, like really paying attention.
Okay, so it's watching the video almost like a person would to see what parts are the most captivating.
Sort of, yeah. It identifies these peak points of attention. And the plan is for advertisers to then target their ads to play immediately after one of those moments.
So the thinking is, if you're really into what you just saw, you might be more receptive to an ad right after.
Exactly. That's the hope for advertisers. More engagement leads to, theoretically, more impressions, higher click-through rates, better results for their ad spend.
Makes sense. What about for, us watching YouTube? Does this actually change the experience? Could it be better?
Well, that's the million-dollar question, isn't it? YouTube's betting that if an ad follows content you are genuinely hooked on, it might feel less like an interruption. Maybe even more relevant.
Less jarring, perhaps.
Possibly. And there's a creator angle, too. If those click-through rates do go up because of this better timing,
then the creators could potentially earn more money from those ads on their videos.
Precisely. It directly impacts their monetization.
This feels like it fits into a bigger trend, though. It's not just YouTube tweaking ads, is it?
Oh, absolutely not. This is part of a much larger strategy we're seeing from Alphabet, YouTube's parent company. They are integrating AI everywhere to, improve monetization.
We saw that in their recent earnings, right?
Yeah, they had a strong first quarter, overall revenue up, and YouTube ad revenue specifically climbed to like $8.9 billion. So finding new ways to make ads more effective is key.
Especially with all the competition heating up, like with AI startups in search getting big valuations.
Exactly. And Google's using Gemini elsewhere, too, like that on-device AI, Gemini Nano, to fight fraudulent websites. So Peak Points is just one more piece of their broader push to leverage AI across the board.
Got it. Okay, let's shift over to CoreWeave. We've talked about them before. Big player in AI cloud infrastructure backed by NVIDIA. They just had their first earnings report as a public company. How did that look?
The top line number is pretty staggering, actually. In the first quarter of 2025, their revenue just exploded, up 420% compared to last year.
Wow, 420%.
Yeah, hit $981.6 million. That was way above what analysts were predicting, which was closer to $853 million. It just shows the absolutely massive demand for AI computing power right now.
Okay, huge growth. But again, there was another side to that report. It wasn't all smooth sailing.
That's right. Despite the incredible revenue, they also reported a pretty significant net loss, $314.6 million.
Which is bigger than their loss last year.
Significantly bigger, yeah. Last year in the same period, it was about $129 million. Now, a big chunk of that increase, about $177 million, was tied to stock-based compensation costs from their IPO.
Ah, okay. So costs associated with going public really inflated that loss number. Yeah. How did the market react? Did the huge revenue win out?
Well, interestingly, no. Even though they smashed the revenue expectations, their stock price actually dipped about 7% in after-hours trading.
So investors are maybe a bit wary about the spending or future profitability despite the growth.
It seems that way. It suggests that, while the growth is impressive, there are real concerns about the bottom line and the path to profitability. Investors are definitely scrutinizing the spending.
What does this tell us about the whole AI infrastructure space then?
Well, connecting the dots here, CoreWeave's story really highlights two things. One, the absolutely ferocious demand for AI infrastructure. They've got massive deals, like with OpenAI, potentially billions of dollars involved.
Right, that new 5-year deal and another big one signed recently too.
Exactly. But the second thing it highlights is the immense financial pressure and the level of scrutiny these high-growth companies face once they go public. The market wants to see not just growth, but a clear path to making money.
And they're not slowing down on spending, are they? Are they planning to raise more money?
No, they're doubling down, basically. They're looking to raise about $1.5 billion in debt. And that's to fuel some really ambitious expansion. We're talking capital expenditures estimated between $20 billion and $23 billion just for this year.
20 to 23 billion.
Yeah, mainly to seriously ramp up their data center power capacity. It's a huge bet on the AI wave continuing to build.
Okay, one more story to connect today. Let's talk about eToro, the stock and crypto trading platform. They just debuted on the Nasdaq. How did that go?
It went very well, actually. A strong debut. Their shares started trading Wednesday, and they closed the day at $67.
And the IPO price was?
$52. So that's a jump of nearly 29% on day one. Pretty impressive start. Gives them a market cap over $5.4 billion.
Solid. Was there a lot of investor interest leading up to it?
Seems like it. eToro and its backers sold almost 12 million shares, raising about $310 million. And apparently the demand was high enough that they actually increased their fundraising target and priced the shares above the initial range they were looking at.
Always a good sign. Now, eToro is pretty well known for crypto trading. Is that still a big part of their business?
Oh, yeah, definitely still significant.
Mm-hmm.
The numbers are interesting, though. The percentage of their trading commissions coming from crypto is expected to dip slightly, maybe to around 37% this quarter, down from 43% last year.
Okay, so a smaller piece of the pie proportionally.
Proportionally, yes. But, and this is the key thing, their actual revenue from crypto trading absolutely soared in 2024. It went from like $3.4 billion in 2023 up to $12.1 billion.
Wow. Okay. So even if it's a smaller percentage, the total amount is way up.
Exactly. So crypto remains a very important engine for them, even as the overall business mix might be shifting a little.
So what's the bigger picture here? What does this successful IPO mean?
Well, if you're connecting the dots, some analysts see this as a positive signal for the IPO market overall. There's been some uncertainty, especially with trade stuff like tariffs recently.
So a sign that maybe the market's still open for new tech listings?
Could be. It also definitely highlights the continued interest in retail investing, regular people trading stocks and crypto online. And it shows crypto is still a major factor, even if its role is maybe evolving a bit.
And it wasn't their first attempt to go public, right?
That's right. Good point. They tried to go public back in 2021 through a SPAC merger, but that deal eventually fell apart. So this successful Nasdaq listing is a pretty big achievement for them after that earlier hurdle.
Right. So quite a range today. We've got YouTube using sophisticated AI to try and make ads, well, maybe less annoying and more effective.
Trying to nail that timing.
Then CoreWeave, showing just explosive growth in AI infrastructure, but also the heavy cost and investor scrutiny that come with it.
Yeah, that balance between growth and profitability.
And finally, eToro making a strong entrance to the public market, kind of underscoring the ongoing strength of retail trading and the significant, if evolving, role of crypto.
Each story really gives you a snapshot of these huge forces shaping tech right now, AI advancement, the economics of rapid scaling, and how we interact with finance online.
We hope this deep dive helped you connect some of those dots. Obviously, these are complex topics and just scratching the surface, really. We definitely encourage you to dig deeper if any of this sparked your interest.
Absolutely. Lots more to explore there.
And remember, we are here to help here at Snarful, so reach out on our website if you have any more questions.
That's a wrap on today's top stories. Remember, tech doesn't have to be complicated, and we're here to help connect the dots. If you've got questions or want to learn more, visit us at snarful.com. Thanks for listening, and we'll catch you next time.